Hey, I'm Omar Azar, VP of Business Development at MatterLab, and you are watching Take a Stock.
And in no uncertain terms, the buyers come roaring back here for the 7th winning session out of the last days here on Wall Street. What a bit of a reversal we had, both for the Dow Jones Industrial Average and the S&P 500, because you see, my friends, both of those benchmark indexes had started the day down in the red. The S&P had been selling off as much as 0.3%, but pretty much a clean reversal here. At the tail of the tape, we are expected to be in positive territory for this Wednesday, December 3rd, and at least for today, it's not really technology stocks doing the heavy lifting. Most of the Mag 7 is actually down. We do have a bit of outperformance from Tesla, that company up about 4% here. Energy, financials, discretionary, those are your strongest sectors in the S&P. We do see a little bit of lag for utilities and real estate as well. That and much more sets the stage for the show, and welcome to it. You're watching Taking Stock. I'm your host, JD Durkin. We are just moments away from the ringing of the iconic closing bell here on the trading floor of the New York Stock Exchange. The truly great Michael Reinking himself, senior market strategist of the New York Stock Exchange, is on deck. He'll join us right after the bell to get his take on price action, the Fed earnings this week, a lot of earnings this week, and so much more. Volatility in retreat on the day, yields in decline as well. The 10-year Treasury yield falling right now to 4.06. We'll pick up the rest of the scorecard on the other side of the bell, and here to do the honors is the team from Helios Technologies. They will also be on the broadcast in just a bit. Ticker symbol HLIO here at the NYSE to ring the bell. Hey, the sounding block jumped there. I got a little nervous when you hit the sounding block a little too hard. Final tail of the tape for this Wednesday, the third trading day of the week and the third trading day for the month of December. The S&P 500 will finish up 0.3. The Dow up what looks like 0.8 or so. The NYSE Composite Index up 0.7, and the small caps having themselves a really strong Wednesday, up 1.9% on the day. Advance to declines tells us for every one stock down, about 2.6 stocks in positive territory. Broad participation across the tape, about 70% of all publicly traded companies finishing today's session on Wall Street in the green. Strongest performing names in the Dow, UNH, Amex, McDonald's, while the laggards, Boeing, after yesterday's strong session, down, Microsoft, and Travelers as well. Michael Reinking is the senior market strategist here at the New York Stock Exchange, one of my favorite go-to voices because I feel so much better after we talk. I also get so much smarter after every time we talk. Thanks for being here as always.
Hey JG, thanks for having me.
So a 5-day rally to end the month of November. What does that tell you about market health, and what did that do to set the stage for December?
Yeah. First and foremost, let me do a real quick plug for the New York Stock Exchange. Right, hope everybody had a happy Thanksgiving. Tomorrow is the 102nd tree lighting here at the New York Stock Exchange. So if you are in Lower Manhattan, come on down to celebrate with us. So look, at the last week we had a pretty strong rally, a little lighter attendance. Right, volumes were a little bit lighter, but we reversed all the losses that we had seen, in November with a 4% rally in the market. We've seen markets trading sideways here a little bit. Today was a green day, right? But we've been consolidating those gains that we saw last week, which is really strong price action. Interestingly enough, I think the last time I was with you about a month ago was the first time that the Dow Jones had crossed over 48,000. We had a pretty rocky November, but we're right back at those levels. And at that time, we were talking about the expansion of breadth and within the marketplace, and we're seeing that again today.
Yeah, I mean, we cover advanced declines now at the top of every broadcast, so we really do see a nice broadening out for participation. Like we said, it's not just tech on green days doing the heavy lifting or discretionary. We get some nice rotation. Thanksgiving, holiday shopping, Black Friday, Cyber Monday, maybe stronger than expected, at least in terms of Adobe Analytics. What did you learn about how strong the consumer is right now,
Yeah,
Michael?
I think we've seen some mixed, some of the survey data has been a little bit mixed, but overall, right, we see that the consumer spending has been pretty solid. Once again, today we saw Sydney Sweeney won the day with American Eagle, putting up very, very solid results. And we saw solid numbers coming out of Macy's, Dollar Tree, right? And so we're hearing, continued, strength from the consumer. There is some caution. They're looking for value, but overall, right, we are seeing spending continue to happen.
Yeah, we also see, and we're going to talk about much more about AEO and Macy's here in just a bit on the broadcast, but we're also talking about this kind of trade down phenomenon for wealthier Americans. They continue to value shop, maybe do more of their essentials for shopping at a place like Walmart. We're hearing that throughout the earnings quarter. 1 week from today, it's Fed Day, my man. We love Fed Day. It's like our Super Bowl here for the financial markets, and it's dot plot day as well. What's on your radar for the next week ahead of the meeting?
Yeah, it's been really interesting, right? We've seen the economic, with the lack of economic data coming out of the government, right, left a little bit of question mark in terms of where the Fed was going to go. New York Fed President Williams spoke a couple weeks ago, which really solidified the idea that we were going to see a rate cut. We've seen the ADP jobs numbers over the last couple of weeks, have been pretty negative. We got a negative print this morning, fourth time in the last 6 months. That I would highlight. It was all driven by small businesses. Right, large businesses are still hiring. The largest companies averaging just under 50,000 jobs, over the last 6 months, and it's remained positive, right? So that adds to that kind of K-shaped economy, conversation. Look, I think next week markets widely expect the Federal Reserve to cut rates. This committee has not wanted to really kind of buck markets when they do that sort of thing. So I think the one question is whether we hear a little bit more hawkish commentary coming from Fed Chair Powell, congruent with that kind of rate cut that we're expecting to see, right? And then the other big focus for markets has really been who's going to be the next Fed chair. President Trump has said he's made a decision. We're expecting to hear that at the beginning of next year, and Kevin Hassett is the odds-on favorite at this point.
Yeah, he certainly is. We'll certainly see what market participants have to say in response to that. If and when we do get the announcement in the next couple of weeks, I could truly talk to you for the entire broadcast, but unfortunately I'm being told to wrap right now, understandably so. The great Michael Ryan King, all the best, and thank you for the plug on the tree
Thanks
lighting
for having
tomorrow.
me. Absolutely.
Is it really the 102nd tomorrow?
102.
It's older than Rockefeller.
Yes, yep, and the tree is oftentimes much bigger.
Yeah, we're very proud of that tradition here at the New York Stock Exchange. We'll talk a lot more about that later on in the show. Michael, thank you as always. Josh is going to grab your microphone. Howie, you and I are going to go for a walk. Where did Macy's finish today, Josh? A smidge below. Okay, so we did end in negative territory. We were just talking about Macy's and American Eagle and a few others there with Michael Reinking a moment ago. Macy's was an incredible candlestick today because it had been down as much as 5%, then it was up as much as 1.5%. Shares ending down fractionally here, posting the strongest growth in the last 3 years for the major retailer after a huge beat on bottom line, and Macy's raising its full year guidance as well. Some notes of caution about the consumer health for Q4 with bifurcated spending, everything Michael and I were just talking about, but Macy's knocking the cover off the ball here in 2025. Shares up 35% from the start of the year. Howard, we'll take a look at two NYSE notables, and one of these Michael and I were just talking about, American Eagle Outfitters. Look at this. 15% performance, an enormous gap up for the stock after a beat on top and bottom. The year, of course, had a lot of ad campaigns, some of which may be a bit more controversial. The whole Sydney Sweeney thing, you may remember, Travis Kelce as well. The stock is now trading back to its highest levels since May of 2024 after an enormous session here on Wall Street. Finally, Howie, let's pivot this way. We'll take a look at the strongest performing of the big banks here in 2025. How many people thought Citigroup would be the best performing financial name? This stock is up almost 3.5% today and up 50%. Yeah, 5-0 from the start of the year. The average one-year price target for Citigroup now sits at $115 a share, suggesting upside potential relative to these current levels of another 8%. Folks, don't go anywhere. We got much more taking stock coming up after this quick break here from the New York Stock Exchange. And now we bring you an interview with Colin Gage of Armor Sciences. He and I sat down recently here at the exchange. Take a look. Welcome to FinTech TV. I'm JD Durkin. President Donald Trump's foreign policy efforts during his second term at the White House has expanded to include a focus on South America. The president has taken a new approach to the war on drugs, as the Department of War has struck over 20 boats smuggling fentanyl in Mexican and Colombian waters. The president cites the 70,000 Americans lost to fentanyl every year as the reason for those strikes. Out of a new report from the Wall Street Journal tells us a recently revealed secret memo from the U.S. government lists fentanyl as a potential chemical weapon. The memo was prepared by the Justice Department's Office of Legal Counsel, and by listing fentanyl as a chemical weapon, the memo provides a legal basis for targeted strikes. Joining me here on the trading floor of the New York Stock Exchange is Colin Gage. Colin is the co-founder and CEO of Armor Sciences, which develops preventative immunogens to combat synthetic chemical threats such as fentanyl. What an important conversation at a really important time. It's great to have you down here. Thanks for joining us.
Thank you, Juju. Appreciate it.
So there's been a lot of debate surrounding the legality of these strikes, a lot of debate surrounding the due process components of these strikes. Take us through the secret memo, which lists fentanyl as a chemical weapon and provides what the administration is saying is sufficient legal basis.
Yes, yeah. So I actually had a brief meeting with Pam Bondi, Attorney General Pam Bondi, earlier this year. And it's clear that the fentanyl crisis is not being done by accident. I mean, these are clear strikes on our population. We're seeing 22 high school age students die every single week, according to a 2022 report. And this is something that's killed hundreds of thousands of people in the last few years alone. So this is obviously an attack on America.
We need to treat it as such. It's a national security crisis.
Colin, there's undoubtedly growing tensions between the U.S. and Venezuela. Americans are seeing those headlines by the day about what potential escalation looks like between those two countries. Tell us about that potential escalation, and what are you watching for as that story continues to play out?
Yeah, so I think this is just the beginning. Unfortunately, bad actors south of the border are continuing to develop and iterate new threats against the United States, new synthetic drug threats. And these come in the form of nitazines, which are broadly reported on, carfentanil, medetomidine. There are many threats that are becoming fentanyl 2.0, 3.0, 4.0. And at Armor Sciences, our main responsibility is to develop long-lasting countermeasures against those threats. So regardless of what happens south of the border, we're ready for action.
Fentanyl, as we said during the intro, kills an estimated 70,000 Americans a year, over 100,000 Americans' lives lost to it in 2023. Tell us about the dangerous properties that could perhaps make it even a chemical weapon. What are those considerations?
Yeah, so it's not even theoretical. We've seen fentanyl weaponized in the past. It was weaponized in a Russian hostage crisis, actually, in the early 2000s. So the government is kind of pivoting off of what they've seen in the past as labeling this as a potential chemical threat. And I think it is a chemical threat. I mean, this has taken more American lives than World War I, World War II, the Vietnam War. To me, that's a domestic terrorism. That's a form of domestic terrorism in the United States.
How are you viewing the relationship between these strikes and the overall fentanyl crisis, given the legal basis the administration is arguing?
Yeah, so I think these strikes south of the border in the Gulf are extremely justified. I mean, these people are coming in and bringing drugs into the United States. They know what they're doing. We know what they're carrying and when it's happening. For us, our responsibility at Armor Sciences is focused on biomedical countermeasures to these threats. So I think it's going to take a joint effort. I mean, the U.S. government is taking action on a defense front and utilizing, America's force in that action. At Armor Sciences, we want to create the countermeasures that can help supplement that and provide safety and a defensive shield against these threats for our military and first responders. So Customs and Border Patrol agents, DEA agents, FBI agents who are going in there and taking on these really narco terrorists are going to need protection against these threats. And that's what we're here to provide.
So talk to me more about how you feel you can provide to that conversation, the immunogens such as those that Armor is providing here. What does that look like in terms of the lens of additional things that can be provided by public officials?
Sure, yeah. So our immunogen, how it works is it stimulates the immune system to create a protective response against fentanyl. And eventually we'd like to create that same protective response against other emerging drug threats that I mentioned. I think eventually, if our product goes through safety and efficacy in the way that we think it will, I'd like to have this available as an option to military first responders that are the boots on the ground going in against these narco terrorists, so that if they're accidentally exposed to fentanyl, accidentally exposed to carfentanil, medetomidine, they aren't going through an overdose or a panic attack. It's just like a bulletproof vest in the same way. We want to provide that protection to them on the front lines.
What more will you be looking for out of the geopolitics angle of this story as it continues to play out? And how do you feel your work at Armor Sciences is uniquely situated to address whatever 2026 brings?
Yeah, so I think, like I said, I think this is just the beginning. The war is going to continue to escalate south of the border. President Trump has made it clear that he intends to completely end the fentanyl crisis. And I'm aligned with him. I want to end the fentanyl crisis too. I think that anyone who doesn't just isn't seeing it clearly. There's hundreds of thousands of people dying every year. These are kids, these are students, mothers, fathers, and that's an empty seat at the dinner table. We need to protect against that on all fronts. That's going to require cooperation between the private sector and the public sector. The U.S. government and the private sector working together ultimately, I think, can end this.
Colin Gage is the co-founder and CEO of Armor Sciences. What an important time to have this crucial conversation. Thanks a lot for being here. Good to have you.
Thanks for having me.
Hey now, welcome back to the broadcast on this Wednesday. You're watching Taking Stock, still live from the trading floor of the New York Stock Exchange. Get you quickly updated on the price action today for the crypto majors, having another bit of a relief rally. Bitcoin up 2% on the day right now, trading right about 93,055. Earlier in the day, it did reach its highest level since November 17th. A nice little bit of relief after several weeks of downward pressure. Ethereum trading up 5% in the session. Solana currently up 2.5% on this trading Wednesday. Everything's by hand, it's fast flying, words are imprecise, my apologies. Let's say hello now to Sam Gayer. He is the CIO at Monarch Asset Management to talk much more about crypto price action and what he's seeing across the broader fintech landscape. Thanks for being here, Sam. Great to have you.
Thanks, JD. Great to be back.
Crypto bull markets. A lot of people are wondering, where are we in this cycle? Are the good times gone? Are we headed for another crypto winter? Maybe not so fast when you see relief rallies like today.
So let's just put everything into context, right? There's never been a better time to be investing in digital assets than right now. Fueled by macroeconomic and regulatory tailwinds that we've never had before, institutional adoption is soaring. Digital asset treasury vehicles are broadening access to the space. Tokenization of real-world equities, on-chain trading of stocks, for example, is happening as we speak. And as mentioned, we've never had a more friendly regulatory environment than we have right now. So is the bull market over? The fundamentals are telling us no.
What do we make of a sell-off? Let's just take Bitcoin. What do we take of a sell-off that reached an all-time high not that long ago at 126, sold off all the way down to, let's call it 84, 85 or so, at the same time that we're having this conversation about institutional adoption, and people are saying, wait a minute, isn't this now the time for this asset to be strengthened?
Sure. Well, first of all, from an institutional perspective, every single major bank has a payments platform, stablecoin project, or digital ledger project, distributed ledger project on its books right now. So that's not going away. From a price perspective, some structural changes have occurred in the marketplace. First of all, it's expected that I think 160,000 Bitcoin are going to be mined this year. Last year, Strategy alone bought 180,000 or so. And this year, I think that's down to about 30 to 40,000. So the marginal buyer is kind of slowing, number one. Number two, when you saw the market surge, this kind of blow off top 126 in October, you saw a big surge in open interest and volume. A lot of people bought that top and are now kind of sitting and waiting for the next leg of the rally to happen. Some structural changes occurred. The market has really not recovered from the October liquidations. On October 10th, 11th, we had $20 billion of forced liquidations. And in the month of October, we had $45 billion, both orders of magnitude greater than we've ever seen in crypto before. And so what does this mean? Lower liquidity equals higher volatility. And we saw that play out this week, as a matter of fact. So Sunday night, speaking of strategy, Sunday night, Michael Saylor telegraphed a change of strategy. Just 2 weeks ago, he was talking about his maxim being never sell your Bitcoin. Well, it turns out that on Monday, they raised a reserve so that they're insured to pay, a cash reserve so that they're insured to pay their preferred dividends. But at the same time, his CEO left the door open that in the future, they may sell more Bitcoin to fund that. And this caused, in a thinly traded market, order books have not recovered in the past month. In a thinly traded market, what this caused was the Twitter sphere to come in, calling for end of days.
Sure.
The doomsayers are out, shorts were in control of the market, and what you saw was a resulting cascade of liquidations.
Yeah.
And then the market, I think it was down about 7% on Monday.
Yep.
And the market was not changed in terms of fundamentals. Everybody from institutions were looking at each other saying, well, nothing's really changed. Has another shoe dropped? Is there anything we don't know? And everybody said no. And the resulting rally, as you just mentioned before, Bitcoin's back up to 93.
Yeah, we've also got this leverage conversation that's going on in terms of the crypto exchanges. How much leverage do they allow the regular crypto investors to really take on? And sometimes that liquidation has a further kind of cascade effect. We've seen that in a lot of sessions. I got to leave it there. That's all the time I have, but please come back again soon. All the best for the holidays.
Thanks, JD.
If I don't see you, Sam Geyer, CIO at Monarch Asset Management. Folks, don't go anywhere. We got much more Taking Stock coming up after this quick break. Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time for what is always my favorite part of the show, not just an outstanding guest interview, but a guest who just rang the closing bell. Say hello to Sean Bagan. He is president and CEO of Helios Technologies, Inc. Not just here for any day, but casual flex. The stock up 2.5% today. You're up 22% on the year, outpacing the market. You're crushing it. Thanks for being here.
Thanks, JD. It's a real privilege to be here. This iconic New York Stock Exchange.
And it's awesome to have you down here, both for the bell and for the show. We'll talk much more about the growth strategy, what's been behind the success of the share price so far this year. But first, personally, what's it like to be up here, ring the bell as the whole world watches?
It's a once-in-a-lifetime opportunity. It's really a dream come true for me, having the opportunity to be here with a lot of our customers, suppliers, and our executive team and their families. It's just really special.
Talk to me about the top priorities and considerations for Helios these days, for anyone who's watching this interview who might be a bit unfamiliar with your work.
Yeah, Helios is a group of companies, and our top initiative is on our go-to-market strategy. We're coming off 12 quarters of declining sales, and we finally have inverted as of June this year. In the third quarter, posted nice growth. Fourth quarter, we expect that to accelerate further, and as we enter 2026 should be a really good year for Helios, and we attribute that to just our customer centricity and doubling down on our go-to-market strategies.
Yeah, you know this market as well as I do right now. Investors oftentimes, they want to hear about guidance. We want to hear about forecasts. We want to hear about what the future looks like. Undoubtedly, you're giving investors a lot of what they want to hear. If your share price is outpacing the S&P 500, what does that look like as we soon enough turn the page into 2026, Sean?
Well, for us, I mean, we have to acknowledge we had some softer comps coming off those years, and so when you get into the percentages, they get to be larger given the baseline. But for us, as we're getting into next year, just given some of the strong order trends and demand trends, and if we can get some macroeconomic help, a little bit of tailwinds in some of the industries that have been challenged across the hydraulics and electronics segments that we serve, we think it can be a really, really good year for us.
What have been those challenges? Is it tariff and trade policy related pressures or other things that as a result you probably have to contend with as well? So much of your customer base has to contend with them.
Yeah, it's particularly for our hydraulics business. I mean, it's more tied to PMI and industrial production, and things have been slower. Our biggest customer is John Deere, and that ag cycle, given where that's at, has also been a bit of a headwind for us. When you go over to the electronic side, it's much more consumer discretionary type products, recreational vehicles, boats, hot tubs, and similarly with interest rates not coming down as quickly as expected, and a lot of that product being financed, that's held back some of the buyers. But we expect that to start turning as we lap some of them softer comps as well. And we're starting to see that electronic segment drive a lot of our growth.
Absolutely. That's about all the time we have. Sean Baggin is president and CEO of Helios Technologies, Inc., having a tremendous year here for the share price and a great day here on Wall Street as well. It's really great to have you. What a pleasure.
Thanks, JD.
Come
really
back anytime. Folks, don't go anywhere. We're going to take a quick break. And right after that, the latest from Scarlett Sieber at Money 2020. Much more Taking Stock coming up right after this.
Welcome back. I am Scarlett Sieber from Money 2020. And on this segment of Hindsight 2020, we're going to show where history doesn't just repeat itself, but it occasionally rage quits. This week, we're rewinding back to November 30th, 2001, when Enron went from energy titan to meme material. November 30th is the day Enron filed for bankruptcy. At the time, Enron was the Beyonce of energy companies, glamorous, innovative, and everyone wanted a piece. But behind the scenes, it was more like a reality show gone wrong. Enron's business model was basically hide the debt, hype the stock. They used accounting tricks so wild that they made TikTok transitions look tame. Investors were vibing, analysts were standing, and then boom, the truth dropped harder than a surprise album. $74 billion in shareholder value, gone. Employees wiped out. Auditors dragged into the mess. The fallout was massive. Sarbanes-Oxley Act came in like the ultimate hall monitor, forcing companies to play by stricter rules. Transparency became the new black. And suddenly, creative accounting was less cool than cargo pants. So what's the takeaway here? If your business plan sounds like a plot from Succession, maybe you should be rethinking that, because markets love innovation, but they hate lies. Until next week, when we cover a December moment that proves even tiny text can change the world. Back over to you.
Welcome back to the show. Markets in positive territory on this Wednesday, December 3rd. The S&P 500 finishing the final tail of the tape up 0.3%. The Dow 30 components finishing up 0.8, and the small caps enjoying the best of the bunch, up nearly 2%. Tomorrow, no shortage of earnings. You may think we're kind of in this wonky holiday period, but we got some key names reporting in the morning. Dollar General, Kroger, and Build-A-Bear. Yeah, Build-A-Bear trades here at the New York Stock Exchange. We'll get their quarterly results before the bell. And after the bell tomorrow, DocuSign, Ulta Beauty, and the team from Rubrik all set to report quarterly results as well. Tomorrow, 3:30, the iconic tree lighting here at the New York Stock Exchange. 102 years running. Please tune in. We will not be doing our normal show, but a very special edition outside you don't want to miss. That's it for today. We will see you tomorrow. Woo!